Progress.
Okay, welcome to financial accounting. We are going to look at the manufacturing accounts number. And this number again is coming from October 2021, the CPA exam. And we want to look at question 2. It's just to confirm that the requirements of this question around manufacturing accounts. Let's just go down to the last. So this question is asking us to prepare for prime manufacturers for their end 31st December 2020, a manufacturing cost statement and a statement of P&L. So one thing that you get to realize that when we are dealing with manufacturing accounts, is what we call a manufacturing cost statement. It is the one that we prepare first before we prepare the statement of profit and loss. And the manufacturing cost statement is more intended to help us determine the cost of goods that are produced. Why? Because when you're doing your P&L, when you're doing your statement of profit and loss, we know very well that the generic profit and loss starts with sales, less cost of sales. And under cost of sales, we have opening inventory and add purchases, and then less closing stock or closing inventory. Now, for manufacturing accounts, you get to realize that our purchases are not sold as they are. We don't basically purchase goods and resell them. We purchase raw materials and manufacture them. So that whole process of the whole cost of transforming the raw materials into the finished goods is what would replace what we have as the purchases. Because in this case, we are not buying and selling. We're not buying finished goods and reselling. What we are doing is we are producing. So instead of us having opening inventory plus purchases, we rather have plus the cost of goods that have been produced. So that's why we do our manufacturing cost statement, basically determine that. So we're going to look at the information that is provided and see if we can be able to draw what is required from this question. So as we can see, we have a cash book right here, and this cash book has the debit and the credit items. As we can see, our balance brought down is 8,500 cash and 45,800 for bank. Basically, this is a 2-column cash book. And why it is a 2-column cash book? Because it has a column of cash and it also has a column of bank. So we can see cash sales. We have something in the cash. We have something in the bank. Collections from credit customers. We have something in the cash. We also have something in the bank. Then we have addition capital also there, came through the bank. On credit side, we have salaries, we have salesmen's wages, we have rent, we have insurance, we have lighting and heating, we have factory power, we have carriage costs, we have general expenses. As you can see, some of them are distributed cash and bank, some of them are just cash. We have advertising, direct labor costs, purchase of office computers, plant and machinery, raw materials, allowance to administrative staff, credit raw materials, suppliers, etc. And then we have our balances. Then from there, we get down to what we call additional information. Now, one thing that you get to realize that most numbers that you come across, you'll see the examiner providing you with a trial balance. But this question, the examiner intentionally provided you with a cash instead of a trial balance. But that does not change in any way how you're going to derive to the end result that they are looking for. So as long as you know what a cash book is and you know what a trial balance is, then you can be able to distinguish the two things. One thing that you get to realize that a cash book records things that have been paid for, or things that you have received in terms of cash. It's about cash receipt and cash payments. So anything that is not cash receipt, cash payments, you will not find it in the cash book. Yet you find that a trial balance looks at wholesomely the whole account. If it's purchases, looks at current cash purchases as well as the credit purchases as well. So additional information, let's see what we have in additional information. So additional information, we have balances as at 1st January 2020. And then we also have items for 31st, 2020. So we have raw materials, which is 32,500. Then we have another, which is 43,400. We have 23,400, we have 27,500. Okay. Now, one of the things that you also get realized within manufactured goods that we have 3 categories of inventory. We have the raw materials, we have the work in progress, and then we have the finished goods. Now, the raw materials, of course, these are not usually our normal purchases. Okay. Work in progress, these at the end of the year are not yet finished goods. There maybe a step or 2 are remaining for them to become finished goods, but we also consider them as inventory. Finished goods, these are the ones that are ready. They have reached the final stage of production, so they are basically ready. And then we have the plant and machinery, which costs us 170.8 million. And then we have furniture, which costs us 32.4 million. Now, as you can realize, plant and machinery, here they put a blank. They put a question mark. Here they also put a question mark. Here they also put a question mark. What does this mean? It means that you have to determine its respective values. And how do you determine them? As long as you've been given the cost, you've been given the net book value at the start of the year. You've also been given the same thing for furniture and office. You know very well that for you to get the net book values at this level, then you have to depreciate these assets. And I think one of the things that they will share with us are the depreciation rates as we get down. And then we have the prepaid rent, which shows rent that was paid in advance. So at the start of the year, we had 3,400 and we closed with 5,400. Trade receivables, similar story. We had 6,500, and then we had trade payables of 4,200. And then they are telling us that the following costs should be apportioned as follows. So we have rent, we have a half, we have 2/8, and then we have administration costs. Now, one of the things that again, that is very common when it comes to manufacturing accounts is that costs are apportioned in different categories. Costs apportioned, we have costs that relate to the factory, and these are the costs, the factory costs are the ones that we use when we are doing a manufacturing cost statement. And then we have the rest of the other costs that go into the profit and loss. Now, those are usually broken down into selling and administration, selling and distribution, and then administration costs. Sometimes we also have what we call financing costs, but in this case, they have not given us this category. I think we shall be able to maybe find the additional information just in case. But wherever you have a 1/2 and then a 2/8 and they are putting a question mark, all you have to know is that when you add this, when you plus this, it should give you 1. Because these are ratios. So it means that a half plus 2/8 plus this should give you 1. So what you basically do is add these 2 ratios together, a half plus 2/8, okay? Which is basically, this is a half plus a quarter, because this is 2 out of 8, which is 1/4. So this is basically a half and a quarter, which is about, about 3/4. And then you're able to get this one, which would be like, I think, about 1/4. We shall try to calculate that. Then we have insurance. You can see insurance 60, then 10, then 30. I think you can see that this plus this will give you 100. So if it's percentages, they should add to 100. If it's ratios, they should add to 1, the big 1. And then we have lighting. Lighting and heating, as we can see, 75%, 25. General expenses, 65, 5, 30. Then we have depreciation, 20%, 10%, 70%. And this is depreciation of furniture. So after you've calculated your depreciation of furniture, you come and distribute it. 20% goes to the factory. So you know that the 20% is what goes in the cost statement. Then the rest, 10% and 70% will be distributed under selling and administration and selling and distribution and then administration costs. Same story with salaries, also distributed similar way. Then you now proceed to, they're telling us that 40% of the carriage costs relate to transporting raw materials, and the remainder relates to transport of goods bought by customer. So they go ahead to give us the saying depreciation of non-current assets was as follows. So depreciation rate, plant and machinery, we have 10% on cost. Then furniture, we have 10% still on cost. And then we have office computers, we have 40%, reducing balance. So these are the rates that we are going to use for depreciation. When they say on cost, we say that this means that we are going to use the straight line method of depreciation. The same thing also happens with furniture. When they say 10% on cost, it's still us going to use straight line depreciation. When they say 40% on reducing balance, definitely we know very well that the 40% will be subject to the net book value. So the question is asking us to prepare for manufacturers limited for their end at 31st December 2020, a manufacturing cost statement and a profit and loss. So that is what we basically do have here at hand. Let's see how we can put that into our working. So yes, so this is Prime Manufacturers Limited. So this is Prime. Manufacturers Limited. This is a manufacturing cost statement for the period ended 31st December 2020. Okay. Like that. You can try to break it down and put this in the next field here. Maybe put it here, whatever you can choose. Okay. Put it here. Like that. So that is what we basically have as our heading. Headings are very important because they help to tell the examiner what exactly you're dealing with. Okay. So like I said, when we are looking at our manufacturing cost statement, our focus is mainly on what happened in the factory. We are basically trying to look at the goods that we are producing or we are yet to sell. What is the cost of these goods? Okay, that is the importance of, because in this case, we don't buy and sell. Okay, we buy, produce. We do buy, produce, and sell. So back to our question, and then we are now going to look for information that goes in our manufacturing cost statement. And we are going to start from up here. So you always ask yourself, what are some of those different components that go under my so-called manufacturing cost statement? What is that information that goes under the manufacturing cost statement? Because at the end of the day, you are given a lot of information, and the information you're given, you have to know which one will go to your manufacturing cost statement and which one will go to your manufacturing P&L. So whenever we are starting, when it comes to the manufacturing cost statement, we start with our so-called raw materials. So I'll just give it the heading here, 3 zeros, like that. So we start with our raw materials. Now, remember, when we are producing, raw materials are one of the key components that feed into the cost of our goods. Remember, we have the direct costs, and then we have the overheads. So the direct costs include the materials and our labor. So that is why we are starting with our raw materials. So for us to determine the raw materials, we start with opening stock. Okay, let's call it opening inventory of raw materials. Opening inventory of raw materials. So let's look for it. Our opening raw materials of opening inventory of raw materials. So right here in the additional information that has been provided, we have, like we saw here, we have details as at 1st January 2020, and then we have other details as at 31st December 2020. So whatever detail is here, these are the opening values. So this is, if I'm looking for opening inventory of raw materials, then 32,500 is actually the opening inventory of raw materials. So I'll pick 32,500. Sorry. I'll pick my 32,500 and take it to here. So since I want to align this, I'll record this in this column. So 32,500. So after I've recorded my opening inventory of raw materials, now just like the way we do when doing a normal P&L, profit and loss, if you want to determine, when we are looking at raw materials, we look at opening inventory of raw material, then we look at the purchases, and then we subtract definitely closing stock of raw materials. If we are to determine what is basically the cost of our raw materials, okay? So after we have done opening inventory of our raw materials, the next thing we are going to look at are purchases. So purchases of raw materials. So by purchases of raw materials, you again go back to your information and look for where are the purchases. Now, purchases will definitely not be in the balances here, okay? Purchases will always be, let's say, in a trial balance, or in this case, will always be in the cash book that we have. So let's see what we are seeing here. So purchases will be on the credit side of our cash book, okay? So let's look salaries, salesmen, wages, rent, lighting and power, factory power, current costs. Then we have purchases. So let's look here. They are telling us purchases of raw materials. It's just my interest here. So purchase of raw materials, we have 32,500. And then we have 125. Okay. We have 32,500 and 125. So these are the purchases from our cash flow. These are the purchases from our cash flow. So, but one of the things that you need to realize, just like I said, how a cash flow differs from a trial balance. When you see these 32,500 and 125,000, only relates to what purchases have been bought by means of either cash and bank. But any business like this one also has what we call credit purchases. Okay? It has what we call credit purchases that will not appear under this cash book, because this cash book is only recording things that were either paid by cash or bank. It does not include anything that was on credit. So you cannot only take these purchases and call them the purchases of raw materials alone. Rather, you're supposed to determine the so-called credit purchases of raw materials and add the three figures together to get your purchases figure. So what I'll do, I'll start my working. So I'll just come here. This is working. So working one is on purchases. So the cash purchases is what is in my so-called here, the 32 plus 125, which I'll try to copy and put the other side. So it is basically the 32 plus the 125, okay? That is what I basically have. If I want to get the total, I'll just try to do this. It's just Excel. So it will give me about 157,500. Now I need to determine my credit purchases so that I can add the figure here and then get my total. But for me, when I go back to the question, okay, when you come back to the question here, you need to look for the credit purchases. Now, just like the question we did last time in the class, you get to realize that this question, they basically didn't give us the credit purchases directly. We rather have to use what I usually call the control accounts to determine our credit purchases. And we say that whenever we are determining the credit purchases, we use the so-called purchase control account, which is also called the creditors control account or accounts payable control account or payable control account. Because purchases are related to payables. These payables come as a result of purchases. It's after you have bought on credit that you have trade payables. So we use this information that has been provided for trade payables and any other information, especially when it comes to the payments made. We're going to use that information and then we are going to use the payments made. I don't know if we have any payments made here. We don't have any payments that are being made to the credit suppliers. Actually, it is here. this is purchase of raw materials right here. And then we have credit raw material suppliers. So these are the payments that are being made, the credit raw material suppliers. Now I want you to see something deep here. This 32,500 and the 125,000 is different from this 45 and 104. How? This purchase of raw materials, this was basically you buy, you pay. It was buy and pay. These ones, it was after some time that we paid. The 45,200 and 104 is to those that we bought on credit that we are now paying. Those two payments are different, okay? One is on spot payment. The other is we are paying those that we had bought from on credit earlier on. So this is the information that we use, this one, and then the balances we have for trade payables to determine our credit, our so-called credit purchases. So I'm going to draw up an account. So this account is, like I said, it's a control account. And for this matter, let's call it a payables control account. Okay. It more or less works like a payables account, but you're going to see the details that are in it. So here, we are going to look at the balances brought down and the balances carried down. So when you scroll down here, payables, the balance brought down is 0 as at 1st January 2020. And the balance of closing balance is 4,200. So when you're doing this, you come here and say, now, since this is a payables have a normal credit balance. So your balance brought down will be on this side, which is 0. Yet the balance carried down will be on this side. So the balance carried down is the 4,200. Is the 4,200. So after you filled this, you then ask yourself two things. What increases my account and what reduces my account? You get it? Yeah. So let's see what increases our account. Now, if these are balance brought down, basically ask yourself what increases your liability, okay? What increases your liability are more credit purchases. And what reduce this is payments to credit suppliers. So that is what we basically have in this account. And this is how it works. Okay. So these two figures, this is provided. Like I said, we have it in the question. Well, this credit purchases is what we are looking for. So this is what I put on my balances. And after that, I said, what will increase my obligation are credit purchases, and what reduces the obligation are payments to credit suppliers. So what I'm going to basically do, I'm now going to look for the information that relates to the payments to the credit suppliers. for the raw materials, which is the summation of these two figures, 45,200 and then 104,500. So I'll just get them and add them together. I'll just come and first add them from here. If you have your calculator, you can add them. So this gives you a total of 149,700. So this 149,700 is what I will put here. This is how control accounts work. So after I've put the 149,700 here, remember I don't know the so-called credit purchases at the end. It is the one that I'm looking for. So what I'll do, I'll basically get the total here and also get the total here. Now these totals are supposed to match because I already have the balances brought down and balance carried down. So these totals have to match. Now if they don't match, that means the difference will be my credit purchases. So this will be summation of this, okay? And this will be 0. So ideally, the difference definitely here, the total is supposed to be the same because this is the higher side that has a higher total. So then the difference is also supposed to be the credit purchases. The credit purchases actually 153,900 because what you just do to get this value is get this minus the 0 that is here. This time we had a 0 balance beginning, so that is why it is like that. And now your totals will be now 153,900 and then 153,900. So your credit purchases are actually 153. So I'll just bring them here and I'll get my total sum of these figures. Give me 311,400. 311,400. So these are my total purchases. Total purchases of raw materials. So I've been able to use my control accounts to determine the credit purchases. So control accounts are basically used to determine credit purchases and credit sales. But in this case, I was only interested in the credit purchases for now. We shall calculate the credit sales when we get there. So after I've gotten this value, I'll come and now transfer it here. Since I'm working under this column, I'll first put this one here because there's an adjustment. So just like the way we have, because when we're doing up our P&L, a generic P&L, purchases have things that may adjust them. Purchases may be adjusted with purchase returns or carriage inwards. Now, purchase returns are deducted, while carriage inwards are added to get to the purchases. So mine is to ask myself, were there any carriage inwards for purchases of raw materials? Were there any carriage inwards for purchases of raw materials? The reason why we add carriage inwards onto our purchases is because carriage inwards increase the value of our purchases. The carriage inwards increase the value of our purchases. So you see what they are saying here. They are saying 40% carriage costs relate to transporting of raw materials, and the remainder relates to transport of goods bought by customers. So they are basically telling us that 40% of the carriage costs, where are our carriage costs? Let's just see if we have the carriage costs in the here. Yes, we have the carriage cost. So under your cash book, this is what we have. We have the 1,200 paid using cash, and then we have 3,500 that is paid using bank, a total of 4,700. So 4,700 of what was paid in carriage costs, they are telling us that 40% of that 4,700 relates to transporting raw materials to the organization, which is our carriage inwards. And then the remainder relates to transport of goods bought by customers, which are our carriage outwards. So carriage inwards are added to purchases. Carriage outwards, we shall include them under our selling and distribution costs. Okay? Carriage outwards go with sales, but when in reality, we don't add them to the sales. We include them under our expenses. And in this case, we shall include them under our so-called selling and distribution expenses. So what I'll basically do, I'll just come back here and I'll say 40%. Here I'm going to add carriage inwards. And this will be basically 40% of 4,700, because you add the other values, you get 4,700. So when I get the value, let's try to use my Excel. You can press your calculator. This gives you 1880. 1880. That is what you basically get. Now, after you have done that, you now get your basically your so-called net purchases. Okay. Basically your cumulative value of purchases. Okay. Which is you can call them your net purchases. Which is the summation of these two figures. Give you 313 to 80. So these are a purchase that you're going to add to your opening inventory of raw materials. So after you have that, definitely you know very well that with less closing inventory, less closing inventory of raw materials, less closing inventory of raw materials. So our closing inventory of raw materials, again, you go back to the question that they have provided us and look at the table in the additional information. When you come up here, when you come here, finished goods, work in progress, and then raw materials. So as 32,500 was our opening inventory, 43,400 is our closing inventory for raw materials. So I'll pick the 43,400 and bring it here. So I'll less it from here. Remember, I put it in for it. I put a negative onto it, okay? Because I'm lessing, and then I'm able to get my difference. So when I try to get the difference, so here, since I already have a negative, I'll just click add. So this is going to give me my cost of raw materials, or call it the direct material cost, to give us the direct material cost. So after I've gotten my direct material costs. Like I told you, we have two direct costs. Okay, they could be three, but in most cases, we usually have material cost and then labor costs. Okay, so after material cost, I'm now going to look at the labor cost. So the next thing I'm going to say, direct labor, direct labor cost. That is what I'm going to basically look at. So for my direct labor, I'm going to ask myself, what information do I have on labor? Again, I will go back to my question and see, do I have anything that relates to labor? Now, when you come to this question in the cash book, I don't know if you see this thing, 54,800. The 54,800 is our labor cost. Now, yours is just to check and see, is there any additional information on that labor cost? Maybe labor costs that went unpaid. We don't seem to see any. Now, you get to realize, and again, I want you to be attentive here. We have the direct labor cost. This direct labor cost usually is involved in producing transforming these raw materials into finished goods. And it can be related to the product. Like it can be, you can easily tell that this product has taken this amount of labor. That's why it is called direct labor. You can relate it to the number of goods are produced. So the higher the number of goods, the higher the cost of that direct labor. But then we also have this cost that would be more of labor, which is the salaries that relate to the factory. But these are not considered as direct labor. They are rather considered as overheads. The salaries of 40% are considered as overheads. So they are not supposed to be included in your direct labor. So the only direct labor cost we have is what we have in the cash book, and we've realized doesn't have any additional information on it. In case it had additional information, we'll go ahead to adjust it accordingly. So you get down here, your direct labor costs is actually 54,800. So you come and record it there. So direct labor didn't have any adjustment onto it. So you just ask yourself, do you have any other direct cost that would qualify to be taken note of? So when you look it all here, of course, your costs will always be on the credit side of your cash book because they are more payments. When you look at them, you get to realize that whatever is direct, we have considered it. In case you had direct expenses, those one would also qualify to be part of the costs to look at. Now, since that is what we have, you then have to add the direct labor and the direct material cost to get what you call your prime cost. Your prime cost, or what you might call your total direct cost. So when you add 269,880 plus 54,800, you see that's 324. So this was just a moment. This is 32. Net purchases this plus this. So this should actually include this one as well. Sorry, I think I left it. It should be this It should be the opening inventory plus purchases less closing inventory to get you 302,380 plus the 54,800 to give you 357,180. So this is your so-called direct cost or your prime cost in the cost statement. So once you have this value, you now look at your overheads. We're now going to proceed to look at our so-called overheads, which are also the factory indirect costs, because these are direct costs. So we are going to look at the factory indirect costs. So the factory indirect costs are other costs that relate to the factory other than the direct costs. Other factories that relate to the factory other than the direct costs. So we have already written the direct costs, which included raw materials and labor. So any other cost that has been provided that has the word factory onto it, or from your judgment relates to the factory, should be included here. So the next thing we are going to do is go back to our question and look for those costs. So I'll start from our cash book and then get down to our additional information. So as we can see, we have salaries, and salaries, they are telling us that it started to 500. Now, remember, salaries are part of, we have salaries, they have told us that there's a percentage that relates to the factory. There is a percentage that relates to the factory. Here, 40% relates to the factory. But these same salaries have additional information onto them. Like I said, the cash book records just the cash payments, cash and bank payments, but it does not look at the outstanding, the unpaid salaries. Yet, if we are looking at the salary expense, we look at two things. We look at what has been paid and what has not been paid. So in this case, before we distribute these salaries figure that we have in the cash book, we have to find what is the actual total salaries figure that we should consider for the period. What is the actual total salaries figure to consider for the period? So that is what I'm going to do. I'm going to get down here and in my working two. So working two, I want to look at salaries. Working two, I want to look at my so-called salaries. So the best thing I'm going to do is to draw up an account, okay? I'm going to use a T account, try to analyze this. So this is what I do have. Okay. So I want you again to be attentive here. So the first thing I'll always look at are my balances, okay? Just like the way I did for when I was looking at trade payables. So in the same way here, we have accrued salaries. Now, the word accrued salaries means outstanding salaries. They're basically salaries that relate to the financial year, but were not settled by the close of the financial year. So from our balances here, we have opening balance for accrued salaries, and then we have the closing balance for accrued salaries. So this is our balance brought down, which is 3,400. Now this 3,400 is a liability because it is accrued, okay? It's basically, the organization is being demanded by the staff. So if this is my salaries account, that I'm analyzing this, balance brought down for the accrued salaries will be on this side because it's a liability, which is basically 3,400. As the balance brought down is on this side, the balance carried down is on the opposite side. So balance carried down, is on this side. So what is the balance carried down? The balance carried down is 5,400. The balance carried down is 5,400. So that is what we basically do have here. So after we have 3,400 and 5,400, the next thing you're going to ask yourself are things like what increases, what reduces, okay? Now, if you've started with your accrued salaries that unsettled, that on the opposite side as unsettled, what increases the obligation of the accrued salaries and what reduces will be on this side. So what increases are salaries for the year. Salaries for the year are recorded on this other side, while the payments toward salaries are on this side. Payments for salaries. So salaries for the year. Now these are payment for salaries made in the year. Salaries for the year means credit and the credit, the salaries that were paid and the salaries that were not paid. Those two values are the same. This is what you paid. And this, we shall get it directly from our so-called cash book. So when you come here in your so-called cash book, we have a payment that was made for salaries. So they have told us they paid every salary through the bank and it is worth 32,500. So when you come here, payment for salaries is 32,500. Then salaries for the year is supposed to be here, but now here we don't have, and this is why we have drawn up this account. So what you basically do is balance off this account. When you add these two figures together, gives you 37,900. This should also give you the same value, but since it only gives you 3,400, then the difference is actually that. The difference is actually 34,500. So the 34,500 is basically our so-called salaries that we are going to distribute. So our salaries is this. So what we shall basically do, remember the salaries here are 40%. So 40% times what we have as here is 34,500. 34,500. So you get 13,800. The 40%. Okay. Yeah. So that is what we basically do. So as we have that as salaries, now we go and look at another expenditure. We go and look at another expenditure. Another expenditure, they're telling us salesman wages. These don't go in the hour cost statement. They are basically related to they go in the P&L. Remember, what we only consider in the cost statement is only what relates to production, factory and production. Then rent, let's see if rent is one of those expenses that is distributed. Rent, I think you can see rent, they told us that a half of the rent relates to the factory. Next question you're going to ask yourself, is there any additional information on rent? Yes, there is additional information on rent. So we have this information, we have this distribution, and then we have something in the cash book. So in the same way, what we are going to basically do is to draw up our rent account, just like the way we have done for that. So my working 3 here is going to look at the rent account. So rent account, rent account. So what I'm going to do, I'm still going to look at my balances. So these are my balances, prepaid rent. Now, prepaid rent is different from accrued. Prepaid, in this case, you paid in advance. So in this case, it is an asset. So my balance brought down on 1st January 2020 will actually be on the debit side, it's an asset. So I'll come here and say, balance brought down for prepaid is actually 1,200. And I will say balance, this is balance carried down. Balance carried down, still prepaid, my prepaid rent. I'll just pick the value that I have, which is 3,200. That's what I have. Then after that, I'm going to look at now, I'm going to do the same thing that I did here for my salaries. I'm going to say that rent for there is usually on this side. Rent for there is usually on this side. And rent paid in there is on this side. So what I'm going to do, this is what I'm looking for. I'm looking for the rent for there. That's why I've drawn up this account. So what I'll basically do is I'm going to get the rent that was paid in the year. And I get this from my cash book. So I'll just come here to my cash book. So rent that was paid is 27,500. Remember, I'm still working with the whole sum rent. I've not yet distributed the rent. It's after I've gotten the balances that I distribute, okay? So you also know that it's good to indicate that these figures are in thousands. Okay, you can put it on top. And also put the debit and credit. So after I've done that, I'm now going to balance off my account, just like how I did for the other. So I'll add the two totals, add this total, and also add this. The totals should match, but since this does not match, there is a difference, and that difference should be able to give me what I'm looking for. So my rent for there will be this minus this. So that's the two values I got to add together to give me the same total. So again, I don't bring in things of balance brought down and balance carried down because I already have the balances brought down and balances carried down. So I don't have to, again, do that. So that's why when I get a difference, the difference should be my rent for the year. which is 25,500. So this rent is what I distribute. So when I come here, I'll just look for the percentage of the rent. Remember, they told me that the so-called factory takes a half of the value of rent. From the information I have here, they have told me rent is a half for the factory. So what I'll basically do is I'll come here and say a half 1/2 times this so-called 25,500, which is my rent for the year. This one, 25,500. Sorry, 25,500. So that is what I basically have. So I'll just try to use my Excel here and see if I can get the value. So I get 127.50. I get 127.50 is my rent. So after that, I need to go back to my question and look for another cost or another expenditure. So I'm just trying to follow them in order. So the next one I'm going to look at is insurance. So insurance is 45,200. Let me see if I have any additional information for insurance. I don't have any additional information for insurance. So means that is the whole value of insurance. Let me see the distribution. So they have told me that 60% of the insurance relates to the factory. So it means that all this figure that I have in the factory, in the cash book, is what I'm going to consider. So I'm going to do 60% of 45,200. So when I come here, I'm going to do insurance, 60% times the 45. So this one I've not drawn up an account because I didn't have anything of prepaid and accrued. That's why I just did directly. So this gives me 271,250. 271,20. That is what I basically have. Okay. Then after I have gotten that, I'll move again to here to see what's the next one. I have lighting and heating. And I'll ask myself, lighting and heating, which is 18,500. Do I have any additional information onto it? So lighting also does not have any prepaid and accrued. It only has the distribution. So I'll just pick the figure that is there, the 18,500, and distribute 70% to the factory. So as you can see, it is only things that relate the composition for the factory that are going in the manufacturing cost statement. These ones, I'm going to take them in the P&L directly. So this is lighting and heating. And they have told us that this is 70%. It's 70% times the figure that we have, which was, I think it was 18,500. Just to confirm. Yeah, it is 18,500. 18,500. So which gives us 129.50. Gives me 129.50 as the component of my so-called factory for the lighting. So after I'm done with that, I'm going back to my expenses again. I see factory power. Now, factory power is very direct, okay? It's very direct. This factory power is basically factory for the factory, okay? It's basically for the factory. It's not going to be distributed. All I can try to find out is if there's any additional information relating to the factory power, like maybe something that was not paid. So I don't seem to see any here. And there's nothing like distribution because factory power all relates 100% to the factory. So what I'll basically do is I'll go and pick that factory power cost and just add it together to determine my total cost. So factory power I'll just add the two figures together. So it gives me 51,850. 51,850 as for factory power. Okay, that is what we basically have. So the next thing I'm going to look at is any other expense that again I have. So I'll move here. Carriage costs. This one, we've already considered the carriage costs bringing in the raw materials. The carriage costs that are taking the goods to customers is considered in the profit and loss. So I'll just move to general expenses. General expenses here. What I'm going to basically do, I'm going to ask myself, do I have any additional information on general expenses? No. Do I have any distribution on general expenses? Yes. 65% relates to factory. So my goal is to find the total and do 65% of that. So general expenses, this is what I have. I'm going to find the total. So when I get my total, I'm supposed to subject this to 65%. That is what I'm supposed to do. So I'll just try to pick this. See if Excel can give me the answer. Excel here is trying to refuse. See, remove this. So it gives me 17225. So 17225 is my so-called component of other general expenses that relate to the factory. Then I'm going to also look at the next expenses. I'll go and look at the next expenses. So I come here, I see drawings. These ones are not expenses for what? Are not going to be expenses for factory. Advertising, this is also not for the factory. Direct labor cost, we have already considered it. These purchases, office, computer, plant and machinery, we are going to look at them. Let me see if there's anything else that I could take here. Allowance to administrative staff, no. Credit raw materials, this one I've already considered this. So let me just concentrate here on the office computers. And now these are not expenses as per se, but they are going to affect our so-called depreciation. Remember, depreciation is one of the expenses that are distributed between the factory and the rest of the other components. So they have only talked about actually distribution of depreciation of furniture. So it is the one that I just first consider. So I'll come to my working and I'll look for furniture. I'll just say depreciation. Depreciation. So I'm going to first look at furniture because it's the one that is affected. This is my working for. So furniture. So furniture, we have the information that is given to us, as we can see from, we have additional information here. So furniture, we started with 24,500. We started with 24,500 as the net book value, and the cost was 32.4. Let's see if there was any additions to furniture in the cash book. There was no addition to furniture because they only bought computers and plant and machinery. So it is presumed that the furniture that exists at the start is the same furniture that existed, apart from the depreciation cost. So we have 24,500 as the net book value. Remember, they've told us that the depreciation for furniture is 10% on cost. So if I want to get the depreciation for this year, I'll just come here and say depreciation is equal to 10% on cost, which will equal to 10% times the cost. The cost of furniture, from what we have been given, here furniture is 32.4 million. You don't again take the net book value, you take the cost. So I'll come and pick this value. So this is 32.4 million. What I'll just do, I'll just remove I'll multiply it by a million to become 32,400,000. So 32,400,000, and this is 10%. It gives me, as I do my calculator here, it gives me 32. It gives me 3.24. That is what I basically get, 3.24. So 3.24 is my depreciation for the year. So if I want to now distribute this, it's my interest, I'll say depreciation. And this is for furniture. Now I'm going to the distribution rate, see what is the depreciation rate, the distribution rates. So furniture, we distribute 20%. So 20% relates to the factory. So I'm going to distribute 20%. So 20% relates to the factory. So it will be 20% times what we have gotten here, which is 3.24. So 324. That is what we basically have. So this gives you 64,800. That is what we basically have. But since these figures are in thousands, I'm going to move these 3 zeros so that at the end of the day, this is what I have. I have 648 as my so-called depreciation expense. Now, since they have not talked about the other depreciation, when you look at here, they have only talked of depreciation of furniture. So we have only depreciated furniture here, but then I want to look at something here. We have the plant and machinery. Now, as for plant and machinery, they have not included it in the calculation. They have not included it in the distribution. This plant and machinery relates to the factory. The plant and machinery does not relate to any other entity other than the factory. So plant and machinery, I will also depreciate it, and the depreciation, I'll take it in totality and record it under the factory. So plant and machinery, what I'll do basically here, I also come here and this depreciation under working here. So we have plant and machinery. These are millions. So we have our depreciation. Now this depreciation, I'm going to look for the rate, for the depreciation rate. The depreciation rate is also 10% on cost, okay? It's also 10% on cost. So what this means is it will be basically 10% times 170, 800,000, 1, 2, 3. So that is what I basically have. And getting the value here is, it will be 17 million per year because it's on cost. So what again this means is I'm going to take the whole figure. Remember, for plant and machinery, we don't distribute it. So depreciation, plant and machinery, we have 17,080. 17,080. That is what we have. I'm trying to leave out the 3 zeros since I'm working in thousands. That's why I have the 17 right there. But there's one thing that I want to bring to your attention before even we report that 17,800. I want us to look here. There is a plant and machinery that is recorded under our so-called cash book. So in addition to the plant and machinery that we started with, there was another plant and machinery that was bought. So we also have to depreciate this plant and machinery and add the two depreciations together. So I'll just bring it here. This plant and machinery. This plant and machinery. So the plant and machinery is this value. I'll just add the 3 zeros, 1, 2, 3. So it was about that. So 10% of this, 10% of this value is 8.5 base. So you can either say this is existing and then you put it, but let me just add them together. So summation of these two values is actually 25620. So let me just put the single value, which is 25620. 25620. So that is what I'm going to basically have as for my depreciation for plant and machinery. So I've just added the one that was bought. We are going to do the same thing even when we get to when we get to office computers, but that will be when we are doing the profit and loss. So for this, after we've looked at that depreciation, ours is just to get back to our question and see if we have any other costs that relate to the factory that we have not yet recorded. So plant and machinery, furniture, prepaid rent, accrued salaries, trade receivables, all that we have done, all these costs we have distributed accordingly, and there is nothing anymore. Office computers, this one we shall work it out when we are doing the P&L. So ours is to come here, and if we have accumulated all the costs, ours is to add up so that we can determine our so-called total indirect costs. Okay, our total indirect costs. So these are the total indirect overheads that we have. So we can just add up with our so-called what? Remember, we had gotten our direct costs. So when you add the direct costs, to the indirect costs, you get what we call cost of production. So our cost of production will be this plus this, which gives us 519,143. That is our so-called cost of production. After we've gotten our cost of production, we have to look at now our opening work in progress. Basically, we call it change in work in progress. We look at our change in work in progress. So what we do is we add opening work in progress. We add opening work in progress, and then we less our so-called closing work in progress. Closing work in progress. So our opening work in progress, from what we have been given, you go back to your question and look for the opening work in progress. It is within our balances brought down here. This is the opening work in progress, 23,400, and then this is the closing. So I'll record this one here, and then I'll record my closing as well, which I'm lessing, which is 27,500. This is also part of the cost statement. After you've gotten the cost of production, supposed to also make this adjustment. So we are lessing this one. Now the net that you get after lessing all those things and adding, you get your final value, which is now the so-called adjusted cost of production or cost of goods produced. So here I'll just use some since I've already put negatives. So you're getting, we are getting 515,043. We are getting 515,043. So that is what we have as our so-called cost of goods produced. So this is the value that we have to end with on our manufacturing cost statement. So the next thing that we are going to do is to draw up our profit and loss. So I'll just use this. And we'll say profit and loss. So this figure is taken to the profit and loss, and that's why we draw up it first. Some students may draw these documents at a go, but today was just for learning purposes. Profit and loss account for the period ending 31st December 2020. So when you're doing a profit and loss, you do the normal one. Definitely, we start with sales. But before that, let's just put our 3 zeros up. Yeah. Okay. So we start with sales, with our so-called sales. And of course, we move less cost of sales, and then gross profit, and then other operating expenses, the normal way. But as we can see, again, from our question, you get to look for sales. Now, one of the things that you get to realize that even sales were not given directly. So we have to calculate these sales. So the sales we have are cash sales. But remember, in addition to the cash sales, we have the credit sales. The credit sales cannot appear in the cash book, and they have not given them to us, but rather they have given us what is called, they have given us the trade receivables balances. As you can see, we have trade receivables balances. We have this balance brought down and balance carried down. And then also what they have given us collections from credit customers. The collections from credit customers. Like I said, cash sales are different from collections from credit customers. Cash sales is cash on spot. You basically, you buy, you sell, they pay you immediately. Collections from credit customers, this includes monies that are being collected from those customers we had sold to on credit that are now paying us later on. So part of the sales is the cash sales, which comes in very easy here. So I'll just do a working, demonstrate this. So this was working 4. I'll just do working 5 and call this sales. So sales, you have cash sales, and then you have credit sales. Okay. So the cash sales have been provided to us and they're in the cash book. So I'll just pick these values as they are and come and add them together. So this is what we've been provided to us. As we can see right there as our so-called cash sales. Just to get the total, my Excel here. And press your calculator, but you come to 3711. Now the credit sales we've not been given, so we are going to drop just like the way we drew up here. Here we drew up a payables control account. Now here we're going to draw up a receivables control account for our so-called sales to determine the credit sales. So I'll just come here. And say payables control account. So this is not payables control account, it's a receivables control account. Receivables. Okay. Receivables control accounts. So receivables control account, I'm going to have my balances brought down and balances carried down. And the balances that I have are here. Remember, receivables are assets. And assets have a normal debit balance. So my receivables opening balance is 0, closing balance is 500. So I'll just come here and say balance brought down is 0, while the balance carried down is 6,500, like that. So again, I ask myself what increases my opening balance and what reduces my opening balance, okay? What increases my opening balance are credit sales, new credit sales. The more I sell, the more I increase my receivables balance. What reduces my balance are receipts or collections from credit customers. When customers pay me, then it reduces my balance. So that is what I do to determine where this appears and this appears. So this is ideally what I'm looking for. This I have, and this, how I get this, I pick it from directly from my cash book. So when you come to your cash book up here, this so-called collection from customers, the 19 and 330, is what we are saying is a receipt from our credit customers. So I'll just come here and add these two figures together. So add the two figures together, yeah, and get the answer. So I'll just try to use my Excel here, try to get my answer as you press your calculator. So it gives me 35,400 total. So receipts from credit customers is this. So after that, I get my totals on the two sides. Sum up here. So this total should also be the total this other side. But unfortunately, this other side we have 0. So it means that the whole sum figure for our so-called our figure for the credit sales is this 360,500. So what that means is that this is our so-called credit sales figure, which I'll put here. Since I'm using Excel, this is adjustable for me. I can get my so-called total sales. So my total sales is 731,600. My total sales is 731,600. So that is what I basically have from calculating. So I'll just pick it here. Let me put it under this column and say this is coming from working 5, just to show. So after I have this value, the next thing I'm going to do is, remember, I'm looking for after my sales, I have to ask myself, do I have any adjustment on the sales? The only adjustment of sales that I will have is sales returns. But since I don't have any sales returns, I'll move to the next one, which is less cost of sales. Okay, I'll move to less cost of sales. Less cost of sales. So for the cost of sales, I'll do opening, inventory. Now here, opening inventory, I'm looking at finished goods. I'm no longer looking at raw materials. So opening inventory of finished goods. So the opening inventory of finished goods, when you come here, you should be able to see them. Finished goods, as we can see, our opening inventory is 54,400. So I'll take that value there. I'll take this figure. Yeah, I'll first work it from here. And then remember, after I've recorded my opening inventory, okay, the next thing I'm going to record, if it was a normal P&L, it will be add purchases. But in this case, it will be add cost of production or cost of goods produced. And this figure is what I picked from here. This 5151043 is what I put here. That was the importance of me drawing up the cost statement. So that is what I basically do have. And once I have done that, the next thing I'm going to look at is definitely to add this, adjust with the closing inventory. So closing inventory is 45,600. So I'll just come here and say less closing inventory of how much? Of 45,600. So that is what we basically have. So after that, I can get my cost of sales now. So cost of sales from what we can see here is going to be this. I'm just going to sum them up since closing inventory already has a negative. So this is 523. And remember, this one also be a negative. So after I get my 731,600 minus 523,843, I am able to get my gross profit or gross loss. But in this case, it's a profit. So my gross profit is this. I'll just add them together since the other one has a negative, and it gives me 207,757. So that is what I basically have. Then I'll come to now less the expenditures. Okay. Now you get to realize that in this case, this is the P&L, so we distribute the expenditures based on what they have given us. So from our question, you get to realize that we had expenditures called administration costs and then selling and distribution. Remember the factory costs, we have already utilized them. So I'll just pick the administration costs first, and I'll record anything that falls under administration. So I'll just come here and say administration costs. Administration costs. Okay. Maybe you could put a heading here, say less operating expenses. So we are starting the administration costs. So administration costs, how do you find the administration costs? You'll come to, let's just start from our so-called cash book and get all the administration costs. So salaries also had administration costs onto them, okay? So salaries is our first expense. Okay. So salaries also have administration costs, and what they told us here with salaries is that they are, administration is 40%. So for me to speed up, let me just try to do this. Let me have my administration costs there, and I'm going to jump some space and put selling and distribution here, so that I can record them concurrently. Selling and distribution. So I'll record salaries here and also record salaries because they fall under the two different categories. So as they have told me that this is 20% selling and distribution, and then this is 40%. So I'll just come here and say this is 20%. Remember, we are doing 20% of what? Of what we got as our salaries value. Remember, we got a salaries value for there, which is 34,400. 34,500, sorry. So it will mean that this is, they have told us that selling and administration is 20%. So 20% times 34,500. That is what we have here. And for the other one, which is our administration costs, for it, we are doing 40%. So 40%. So when you press your calculator, you should be able to get these two figures. I'll use, let me use the second column here. So for me, I'll get this directly 13,800, and then here, I basically have 6,900. Okay, that is what I basically have. So I'll move to the next expense like that. So the next expense I'm going to look at, let me look at rent. Now rent, you get to realize that administration, they gave us a blank figure. So we just have to calculate that percentage. But it also under here, so I'll record rent here and also record rent here. But for here, basically this rent, since they have given me administration costs, I'm just going to calculate the ratio. Let me just calculate it here. Rent ratio for admin. I'm going to do, it will be 1 minus. Now the ratios they have given me the other side is 1/2 and 2/8. So 1 minus 1/2 plus 2/8. But these are in bracket. So I should be able to get my so-called what? My so-called value. So just a moment. Now, for you can use your calculator in case it can do fractions, but this is what I'm getting. I'm getting 0.25, which is 1/4. 0.25 is 1/4. That's what I'm getting. 1/4. So it means that the rent here, you can even use points. 0.25 times the rent figure. Now rent, we also determine the rent figure. We determine the total rent figure where we did this account. It was 25,500. So this will be times 25,500. This is for administration, which gives me 6,375. Then I'll just get the rent for here. Now the rent for here, remember it is 2/8. 2/8 still times the same, sorry, still times 25,500. That is what I have. It's now to get the exact figure on your calculator. Just bring it here, add the equal sign. So it gives me 6,375. Not very different from the up one, because this is also a quarter. 2/8 is also a quarter, ideally. So after that expense, I'm going to look at another expense which I've been given, which is, I'm going to look at, let me look at insurance. Let me just base on this order. We look at insurance. Insurance, we have 10% here, and then we have 30%. So I'll just come here. As you can see, it is the same P and L, but the expenses are distributed under different categories. So you should also go ahead to distribute them accordingly. So this is insurance. So our insurance cost, total insurance cost, I'll just borrow it. If here is 42,500. 42,500. So based on what they have given us, insurance 10% for selling and distribution. And then we have 30% for administration. So this is 30% times our so-called 45,200. 45,200. That is what we have. When I bring this one here, gives me 13,560. And then under selling and distribution, this is 10%. So I'll just pick this, take it down here. So this is 10%. Sorry, 10%, which is 4,520. That is what is there, 4,520. So after that, let me look at another expense here that have been provided. This is a very common thing with these numbers. They have a lot of distribution. So I have lighting and heating. So I have it here. Then I also have it under my selling and distribution. So from here, you get to realize that this is 5% and then this is 25%. Okay. So administration is 25% and then the other is 5%. So this is 5%. Selling and distribution is 5%. Of what you're multiplying for, you just pick a leaf from what you have up here, 18,500. 5% of 18,500. Should be able already to get the value here. You get 925. Okay, and then for administration it was 25. I'll just pick here. So this is 25%. Let's pick the same value. %25 of this should be able to give us okay, it's coming as text. Let's just we just do it automatically here, but you can press your calculator. 25% times 18,500 gives us 4,625. That's what we have. And then let's just get another expense. We have general expenses. This is 5%, this is 30%. So again, let's pick this. I'll pick general expenses here. They have told us here it is 30%. So here it is 30%. times, I'll just use the figure I used up since I already calculated. Oh, this was 800 plus this. 2,6,500. 2,6,500. Assuming that is the value. Okay. This gives me 7,950. I'll just pick this general expenses and put it down here. The percentage on this one for general expenses and administration was 30. No, sorry. Administration was 30, then here it is 5. So here it is 5. So just change the 5. Get this value here. 1,325. Okay. That is what we basically have. And after we have that, the next thing we are going to look at is another expense that we have. Anything that we have not yet looked at. Salaries. Have we looked at salaries? Yes, we've looked at salaries. So salaries is the next thing there. So salaries have been looked at. Let's just look at depreciation for furniture, then we shall look at others in general. So depreciation of furniture is also cutting across. So I'll just record it here. Depreciation for furniture. And depreciation for furniture there. So as we can see here, it is 10% and then the other is 70%. So when it comes to selling and administration, it's 10%. So here it is 10%. I'll just put here 10% times. The depreciation for furniture, I'll pick again a lift from what I had here. It was 3.24. 3,240 basically. 3,240 like that. That is what I basically have. We can just try to get the answer here, which gives me 324 here. Then I'll go up and sorry, I'll come here. So here they told me that it is 70%. So 70% of 324. 70% of 324 is 2,268. That is what I basically have. So I've tried to look at the costs that are shared. I've looked at all this. The next thing I want to look at is anything else that I've left out. Now there was a cost here. Remember I talked about the cost, the carriage outwards to our customers. So they told us 40% of the carriage cost was relating to transporting raw materials and the remainder to transport goods to customers, which are carriage outwards. So I'm going to record my carriage outwards under selling and distribution, because that's where they fall. Carriage outwards, and how I determine the amount is, remember I already actually determined the total. I determined the total. I think they may just try to go it up here and get the carriage. What I use, it was 4,700. So 60% of 4,700 is what I'm supposed to have there. Just copy. So 60% of 4,700 are carried outwards. We just get the total here, the value. Gives me 62820. That is what I basically get. Now, after that, the next thing I'm going to look at are my so-called, after I've looked at the carriage outward, so this one I've already looked at it. So let me just look at depreciation. Then I go back to the cash book and see if there's anything I've left out. So the depreciation, remember this plant and machinery, 100% relates to the factory, does not relate to the P&L. Furniture, I've already distributed that. Now let me look at office computers. So I'll just come here, office computers. So I'm just going to look at the depreciation for office computers under my working. Depreciation for office computers. So I have my office computers. Now, office computers, you get to realize something, that they had a balance. This is what they gave us. So we started with 18.5 million, which is 15,500 net book value. And then we had a purchase. We had the purchase of 13,550. Okay, and we are using reducing balance method, basically. So I'll just pick this. So since we are using reducing balance method, remember, this is the net book value for this that we started with. So the net book value here, call it balance brought down. Balance brought down, the net book value is this value. And then we have the so-called additions or purchases. We have additions for there. We have additions. The additions are in the cash book. So the additions of the office computers are here, which is 35,400. Now this one, I'll just put it there because it is its first year. So this is the net book value at that point in time, okay? If an asset is being depreciated for the first time with reducing balance, the net book value will always be the cost. So I'll just total up here. Total up that and get depreciation. So depreciation, remember they have told us depreciation for office computers is by what? Is reducing balance 40%. So I'm going to subject 40% onto that value. It's going to be 40% times 50,900, which will give us 20,360. So that's what we have for depreciation of computers. Now, depreciation of office computers, I'll put it under administration costs. Why? They didn't give us a distribution, so the best fit for them is including them under administration. Okay, it's including them under our so-called administration expenses. So we have gotten 2360 right there. So after depreciation for office computers, the next thing we are going to look at is, so we have accumulated this, we have recorded everything here. Let's just see if there's anything else that we have not taken into consideration. This one we have taken into consideration it. Let's just look at our cash book. So we have these allowances to administration staff. These allowances to administration staff are also expenses that we're supposed to record under our so-called administration costs. So this is 800 plus 25, 500. So I'll just record them as well under our administration costs. So they are 800 plus 25, 500, 25, 500, giving us 26,300. So you have written the administration costs. So these ones I already took into consideration that. This one is not relevant here. Advertising, this one, we've not talked about it. Advertising is a selling and distribution expense. So I'll just bring it down under my selling and distribution expenses and say advertising. And it is 19,500. As you can see, advertising does not have any adjustment onto it. That's why I've not drawn up an account like I did for rent and salaries. So anything that does not have an additional information, I just pick the way it is. Drawings are not expenses, okay? Drawings are not expenses, so I don't record them. General expenses, this one I already took into consideration. Carriage costs, I took into consideration. Factory costs, factory power, I took into consideration. Lighting, I took into consideration. This one I took into consideration. Rent, I took into consideration. What I've not taken into consideration is the salesman wages. At least salaries I took into consideration, but salesman wages relates to selling and distribution expenses. So I'm going to take the salesman wages. I'm going to take the salesman wages here. And I'm going to add up the so-called values that I have here. I have 2,800 plus 18,700. 2,800 plus 17,800. 2,800 plus 17,800, which gives me 2,060. Is it? It's 18,700, not 17,800. It's 18,700. So which is 2,1500. That is what I basically have. So I think I've been able to accumulate all the expenses. So I should be able to get total administration expenses. Total administration expenses. Which is that. And then here is total selling and distribution. Selling and distribution is that. Then for me to get the total expenses here, will be the summation of this, which gives me 159 something something Okay. And after I've done that, I should be able to get my so-called net profit. So net profit will be the gross profit we got, this one. Okay. So I'll just do like this, equal sign, gross profit, sorry, minus total expenses, which gives me 48,330. So that is my net profits that I have gotten from this. So key things to note, I say that these expenses, you can also have a category for finance, and they are called finance costs. But in this case, we only had two categories for administration and selling. And you've seen how we've distributed the different costs based on what the examiner gave us. We picked this value, and this value replaced what would have appeared as purchases, and that's how it came here. So that's how the question basically goes. And that's how manufacturing accounts are handled. So that is why we have the P&L, and then we have the manufacturing cost statement. Sometimes they say, draw up the manufacturing, trading, and profit and loss account. Basically, they want to draw up something from up here, up to down in a single statement. Okay. So you need to understand that sometimes these two statements can be combined, and they are called manufacturing, trading, and profit and loss account. So here you will not have again, have this heading. Basically, this heading will be away. After you've gotten cost of goods, cost of goods for what are produced, you just move to your sales and get down to up to profit. So the statement will look like this. But in this case, they ask them as separate statements, and that's why we have drawn up something up here, and then we have gone ahead to draw up again something down here. So this is what we have. Okay. So thank you so much for listening.